When we think of things that rich people buy, we probably think of fancy cars and private jets. And while the rich do purchase these luxurious items from time to time, but the most part, they are spending their money on things that will further grow their wealth. In fact, the best way to see your net worth grow exponentially is by buying assets that earn you more money over time. But to many people, investing sounds overly complicated, especially if it involves investing in more than one financial asset. Today in this video, I'm going to share with you 5 assets that you should consider investing in 2023. So, let's start the video. The number 1 asset is dividend stocks. The first billionaire in history was John Rockefeller, and he made an interesting statement one day saying that his only pleasure in life was getting dividends. People are known to be really involved in dividends, and there's a good reason for this. Dividends make up 60% of the S&P 500. Dividend stocks are stocks that pay out regular dividends, usually on a quarterly basis. When a company earns a profit, it can choose to reinvest that money into the business or distribute it to shareholders as dividends. Dividend stocks are shares of companies that choose to distribute a portion of their profits as dividends. They are a great way to earn passive income, and as the company grows, the value of the stock may also increase. Dividend stocks tend to be less volatile than non-dividend paying stocks and can provide investors with a steady stream of income. Investing in dividend stocks is a good way to build a diversified portfolio and generate long-term wealth. The number 2 is exchange-traded funds, ETFs. An exchange-traded fund is a type of investment fund that is traded on stock exchanges just like shares. They were first introduced in the early 1990s and have become increasingly popular in recent years. ETFs are a great way to invest in a basket of assets without having to take on the risk of buying individual stocks. They are also much cheaper than buying a traditional mutual fund. There are many different ETFs available covering a wide range of asset classes. This means that there is an ETF for everyone, whether you're looking to invest in stocks, bonds, or even real estate. The beauty of ETFs is that they are relatively low risk, yet still offer the potential for high returns. The global ETF market is currently worth around $4 trillion. This is expected to grow to $20 trillion by 2025. This means that there is a lot of potential for growth in this market. So, if you're looking for a safer and reliable investment option, then you should consider investing in ETFs. They offer the potential for high returns with relatively low risk. Real estate. In 2023, real estate will be one of the best investments you can make. As inflation rises and there's signs of recession, the prices of real estate are expected to rise significantly. So, now is the time to buy. Real estate can be a good asset to invest in due to several reasons. First, real estate offers the potential for steady cash flow from rental income. Rental properties can provide a steady stream of passive income that can be used to pay off mortgages, reinvest in additional properties, or provide a buffer against unexpected expenses. Second, real estate has the potential for long-term appreciation in value. Over time, real estate tends to appreciate in value, providing investors with an opportunity to sell their properties at a profit or use the increased equity to purchase additional properties. Third, real estate can serve as a hedge against inflation. As the cost of living increases, rents and property value can provide investors with a higher rental income and an increase in the value of their properties, which can be used against inflation to live a better life. Commodities. A commodity is essentially something that people buy and sell, like a raw material or agricultural product. For example, wheat is a commodity that's bought and sold on the market. Farmers grow it, and then it's sold to bakers who use it to make bread. The price of wheat can fluctuate based on supply and demand, which gives us a clue as to how commodities are directly linked to inflation. Some other examples of commodities include oil, gold, silver, and even coffee beans. These are all things that people use and rely on in their daily lives, and their prices can also fluctuate based on market conditions. As the prices of goods and services rise, commodities often follow suit, preserving the value of the investment and acting as a safeguard against eroding purchasing power. While investing in commodities holds promise, it's essential to bear in mind that commodity markets can be volatile and subject to various factors such as geopolitical events, weather conditions, and global economic trends. Cryptocurrencies and digital assets. Cryptocurrencies have been the talk of the town for a few years now, with people making some serious money investing in them. There are a lot of key benefits of investing in cryptocurrency. Firstly, cryptocurrencies have seen significant growth in the past, allowing early investors to make large profits. The price of Bitcoin in 2014 was just $320, and now in 2023, it has been traded for over $26,000, which shows the growth of crypto over time. Another great benefit of investing in crypto is its accessibility and security. Investors just need a computer or a smartphone with an internet connection to use cryptocurrency. There's no identification verification, credit check, or background to open a cryptocurrency wallet. It is way faster and easier compared to old financial institutions. However, it's important to remember that cryptocurrency investments come with risks, including price volatility, regulatory uncertainties, the lack of intrinsic value, and security concerns. It's crucial to do your research and carefully consider these factors before investing in cryptocurrencies. Thank you for watching the video. Please remember, investing in the right assets can be a game changer when it comes to building wealth and securing your financial future. And the power to build wealth and secure your financial freedom lies in your hands. Thanks for watching, and we'll see you in the next one.